tonight will be, like I said, the final dinner. You can call it the last supper. You can call it whatever you want to call it. This is supposed to be the biggest one. So we had the cocktail, we had the dinner last night, and tonight is the last dinner. We want for all of you delegates, all of you, to attend. We noticed some of you were not there last night, but we want for you to be there tonight. So please, come for tonight's dinner. It's the last dinner, and we want you to come looking good, whether you want to be in your traditional attire from your respective countries or just in the formal wear. It is up to you. But please come for the dinner tonight. Let's have fun, let's enjoy, let's say goodbye, or let's begin to say goodbye to each other at dinner tonight. So again, we plead, let us all attend, plan to attend dinner. And it will start at 18 hours. So 18 hours we will start, not here, but in the hall where we were yesterday, where we had the dinner, where we had the whole day's proceedings and the dinner yesterday. We will go back tonight for dinner. So please take note. And then, sponsors. Of course, there's going to be the third and the fourth and the fifth, etc., of the CEOs Summit. So for next year's summit, if you feel so moved to be a sponsor of next year's summit, please see the Kenya Re officials. I'm sure you've seen them. You've seen the MDs. You've seen you've seen Gladys. You've seen all of them. Please look for them and just let them know, and we will make sure that those intentions of yours are catered for to the full. We are already getting response. Some people are already expressing interest, strong interest, to be sponsors next year. Don't be left out. So if you want to be a sponsor in next year's summit, please just see me if you don't see any of the Kenya Re employees. I'll identify as a Kenya Re official today. So please do get in touch with us, and we will help you in the best way that we can. Speaking of sponsors, do we have any representative from Monarch Insurance here this morning? Anybody from Monarch yet? No? Okay. So we are going to start. Oh. Here we are. Sorry, I didn't see you. Let's give our sponsor, Monarch Insurance, a big hand. Welcome.
Good morning, fellow delegates. Just to take this opportunity to thank each and every one of you, and Kenya Re in particular, and especially the people of Zambia for welcoming us to this very, very beautiful country. We are the Monarch Insurance, are happy to associate with the Kenya Re, and we've worked together for many, many years, and I can confirm that they are really a good friend to have, and that's why we support this summit. We've done it for the second time, and I can confirm that next year we'll be there. And I ask you to join us so that we can be many, many more sponsors. Thank you very much.
Thank you very much, Monarch. You see, I told you that sponsors for next year are already lining up. So if you want to be one of them, Monarch might have beaten you to it, but there's still chance for you to add your organization's name to that list of distinguished sponsors for the CEO Summit 2026 edition. So please don't be left out. Thank you very much, Monarch. And so, after officially opening and starting the deliberations yesterday and ending with the dinner, we now have day 3 of the 2025 edition of the CEOs Summit. We will start with a panel, and this panel is entitled Regulatory Frameworks and Policy Synergies. We will have a keynote address, which we will start with, and thereafter we will have a panel discussion. But the keynote address is entitled Regulation at the Center of Balancing Innovation and Stability. And to present this first keynote address for today is Maiwase Chilongo, Risk and Business Management Expert. Now, just to give you a bit of background of Maiwase, she is a seasoned risk and business management executive that has worked in the financial sector for the past 21 years, with over 19 of those being in the insurance industry. Maiwase started her career in insurance, working as an insurance broker with Aon Limited in the UK, and in her last role held the position of Head of Operations at Liberty Life Insurance, Zambia. She is a law degree holder, which she obtained from the University of Manchester, and has a Master of Business Administration from the University of Cape Town. She also holds postgraduate diplomas in management from Henley Business School and teaching methodology from the University of Zambia. Maiwase is an associate and a chartered insurer of the Chartered Insurance Institute of the UK and has an advanced diploma in insurance from the institute. She's also a fellow of the Insurance Institute of Zambia and an associate of the Chartered Institute of Arbitrators, UK and Zambia. Let's put our hands together for Maiwase as she comes with the first keynote address of the day.
Thank you, Paddy, and thank you for the generous introduction. May I just write on the protocols already observed and say good morning, everyone. So as mentioned, I'm Maiwase. I'm Zambian, but incidentally, I was actually born in Kenya. So as the national anthem was being played yesterday, I was able to recognize some of the lyrics and so on, and I was quite happy and comfortable. So very happy to be here in front of you talking about regulation in the insurance industry. So basically, the role that I have here is just to set the scene for the panel discussion that is to follow. And I'll be talking about the regulation at the center of balancing innovation with stability. And to do that, I'll start off by just going through some of the regulatory environmental issues in terms of insurance. And then later I'll go into who are the collaborators that we see in terms of innovation in the insurance sector. I'll then look at enablers in terms of innovation. And then just to wrap it all up, I'll look at what the regulators are doing to actually balance these two conflicting items, the innovation and the stability. So to start with, I'm going to look at the regulations as mentioned. My presentation was prepared for a Zambia scenario, but our regulators talk a lot and share notes. So you'll find that a lot of the regulatory environmental issues within Zambia are similar to other countries. Okay. So to start with, in Zambia, our regulator is, for insurance entities, is the Pensions and Insurance Authority. So they're the ones that look after the industry. And their main duty is to basically maintain financial stability within the sector. So we have 3 units. One of them is the Prudential Supervisory Unit, and they look at the ensuring that we have viable insurers on the market, making sure that the businesses are sustainable. We also have, they promote market confidence to make sure that we're able to actually meet the obligations that we have. Then we have another unit also, which is the Market Conduct Unit. This unit is there to look after consumer protection. Because as we know, if we're not able to service our clients right, we won't be able to attract more clients going forward. We have market integrity that they look after as well as fair and transparent dealings. So fair processing of claims and so on. We've also got making sure that we're fulfilling contractual obligations as insurers. So these are the cornerstones of what our regulators are doing. Then we also have the market development. This is newer developments within the regulatory sector. We now see that our regulators are more interested in fostering innovation and responsibility and making sure that we're addressing protection gaps. So where can we have more products being produced to be able to actually serve the market that we are serving? Our regulator is also looking at facilitating economic development. So yesterday we spoke about trying to grow penetration from 3 to 10%, and these are the areas that our regulators are constantly looking at to see how they can support us. So in terms of other regulations we see, as a financial sector, We also have the financial crime regulations. We have the anti-money laundering regulations. And these ones are social security, so government security, making sure that we are not financing terrorism or helping to finance terrorism, making sure that we're also acting in line with the laws. We also have personal data and cyber. So in terms of personal data, basically just to make sure that our fundamental right of privacy is being adhered to within the environment that we work in, and cybercrime. So we're all trying to enter the digital market. We've got social media that everybody's using every day, but just to make sure that the environment there is safe and secure is why we have these kind of laws as well. Then we have the general regulations. So these are common to all the other companies that are doing business. We have our Revenue Authority, we have governance, which looks at the Companies Act and so on. We've got employee-related regulation, we've got Employment Code Act, we have a National Pension Scheme, NEMA, which is the National Health Insurance. We also have workmen's compensation, so quite a lot there. Then you have the municipal licensing. So wherever you operate, you obviously need to get your licenses and make sure those are in place for you to be able to do your business. So it's quite a lot. So generally the landscape is characterized as being operating in an environment where there's a lot of different regulators. So you'll see there we've got the CCPC as well. This is the Competition and Consumer Protection Commission. They also come in to look at issues relating to consumer protection, looking at complaints that are coming through to them. We have Financial Intelligence Center, as I mentioned. We have the Anti-Corruption Commission. We have Office of the Data Commissioner. We've got ZICTA that looks at IT, infrastructure, technology, and so on. We have the National Pension Scheme. We've got National Health Insurance. We have PACRA that looks at the Companies Act and so on. We've got Zambia Revenue Authority, and we also have workers' compensation. So all in all, it's a complex environment, which sometimes makes us look like this when we're thinking about what kind of regulations we have to abide by. And then we have the multiple regulators that I spoke about, which sometimes have us sweating because we don't know what's going to come up next. So there's a lot to look at here in terms of the regulatory environment. It's sometimes very intimidating, but it's something that innovators will have to tackle with in order for them to actually get their products onto the market that are more innovative. So now I'll look at collaborations. So within the insurance sector, it's widely viewed that in order for us to have innovations, the collaborations we'll be seeing will be in underwriting. So how do we use AI and machine learning to be able to assist our underwriting processes to make them more efficient? In terms of payments, so how will we have easy payment methods for our clients to be able to make their premium payments quickly and also for us to pay claims quickly? We have customer engagements, so we need to collaborate to see how we can be closer with our customers and give them a more specialized service. And then pricing as well. We can use AI and machine learning to be able to use our, to get our actuarial pricing done quicker and in a more efficient manner. And then claims processing, detecting fraud. Fraud is actually one of the most expensive or one of the biggest costs for insurance companies that needs to be cut out. So how can we use machine learning and so on to be able to process our claims and to detect fraud quicker? So on the other side, on the right-hand side, we've also got some of the benefits of collaboration. So what we see generally is that we'll be able to develop products quicker. As traditional insurers, we don't often look at product development departments in our organizations. But if we collaborate with other players, we should be able to get products out faster. Reduced cost. So by using some of these methods of becoming more operationally efficient, we should be able to reduce costs, therefore reducing the actual cost of insurance and being able to broaden our horizons and offer more products to the lower income sector as well. And then just innovation. I think we can all agree that as traditional insurance, we're not the best at innovating. But if we were to collaborate with other players, perhaps we could be able to get it right. And then customer experience. Just trying our best to make sure that our customers are actually getting a seamless product, and they're able to have fast and simple processes. Okay. So now we'll look at enablers to innovation. So this slide actually comes from FSD Africa. So it's an Africa-centric kind of viewpoint. And basically just looking at which areas do we need to work on to be able to be more innovative. So the first area is the underlying infrastructures. So do we have electricity that we're able to use to come up with our innovations, access to mobile phones, which of course our mobile providers can be able to assist with, as well as with adequately priced digital connectivity. So we want to use the digital space, but is the pricing for our connectivity right? The next item there is enabling testing and learning in the regulatory environment. So remember, I showed that very intimidating situation in terms of regulations. So do we have people who are able to assist with navigating that complex environment? The next is supervisory support for innovators and new entrants into the market. You know, are they able to get timely licensing processes, softer guidelines for things like microinsurance and so on? So are these also going to be looked into? Next, we have access to finance. So to innovate costs money. It's not free. You need to spend money to be able to innovate and to create new products, processes, and so on. So do we have access to finance to be able to do this? Next is market engagements and enablers. So the first is just looking at, do we have a digitally and financially literate population? So it's well and good us churning out all these innovative products, but is the market ready for them? Are they able to actually purchase the products that we're producing for them? And also, is there an ability to actually find aggregators who will be able to distribute our products for us? These are other issues that need to be looked into. And the last one there is a strong talent pipeline. I think one of the speakers earlier yesterday spoke about how when they looked around the room, they didn't see as many youths or younger people as they'd want to see. But if we're trying to be innovative, it would be best for us to make sure that we also have the younger population to give their ideas, give initiatives, so that we can think outside of the box. Okay? So that's on the enablers in terms of innovation. So my last slide looks at what regulators are doing in order to harmonize these two issues. So keeping the stability, the regulations that I spoke about initially, the environment we said was very complex, just to ensure that we have a stable environment that we're working in, and then also just merging the innovation, because we want to have innovation, we want to have market development. What are regulators doing? So a recent development that we've seen, starting from about 2015, is the regulatory sandbox. So you might ask, what is a regulatory sandbox? I don't know if anybody in the room has heard of regulatory sandbox before, but it was fairly new to me as well. Anyone? Hand up? Regulatory sandbox? Okay. We have a few hands up. So basically what a regulatory sandbox is it's a tool that provides a structured test environment for innovations. So basically innovators, insurtechs and so on are able to test their products, services, and business models in this environment. So they're able to have a controlled setting which allows for live experiments. And we say live experiments, we mean these are experiments that are done on actual clients. So you'll take your product, you'll give it to a client, they'll test it, they'll see how they're able to navigate with that product, and we'll be able to learn from what it is we're able to observe. The next one there is, it looks at the immediate needs to comply for all regulatory requirements. So there's no immediate need, meaning that when you're operating in that environment, the test environment, the regulations that are on the ground will not necessarily apply to you. Why? Because the regulator is trying to observe and see just how the regulations are going to be affecting that particular product or model that you're trying to introduce. So they may slacken some of the regulations. They may think of other regulations that may be put in to make it easier for you to operate. And basically, it's just a more open environment. So you'll see on the last bullet point here on the left that the regulatory sandbox, the main goal of the regulatory sandbox is to enable innovation while ensuring that consumer protection and financial stability are not compromised. So the regulators have come up with this just to be able to foster innovation while still keeping the stability there. And the key features of a sandbox, you'll see them at the bottom here. So I mentioned the testing environments. So companies are able to test their solutions with real customers, but within a controlled and limited environmental scale. Then you have the regulatory guidance. So during the whole process of testing, the regulators are observing, like I mentioned earlier. They're looking to see what is affecting that particular product or model. How can they change their regulations, slacken them a bit to see if we can be able to make the innovation operate better. And they're basically just getting ideas from there. It's normally time limited, so perhaps you'd have a 12-month period in which to test your product or your innovation. And then its customer consent is required. So any participating customers within the sandbox would need to have adequate knowledge of why they're doing it, and they'll need to consent to also being a part of the sandbox experience. And then we also have transparency. So the results of the findings would need to be shared with the regulatory body to inform future policy making. So like I mentioned, it's a benefit to the regulators as well, because they'll be able to understand that with these new innovations, which obviously, since it's an innovation, you've never had it before, they'll be able to understand better just how they can put in policies in place to make sure that such innovations in future will still be able to flourish. And then on the right-hand side, I've just indicated some of the advantages of having a regulatory sandbox. So of course, it encourages innovation because it gives you a space in which you can test. It improves regulatory frameworks. So like I mentioned, constantly learning how these innovations can be better supported with regulation. And then also consumer protection being a big issue. Consumer protection is big because we need to, as insurers, make sure that we are trusted by our customers out there in order for us to attract more business. And it reduces the time to market. So because you're in this regulatory sandbox environment, you're able to understand better and quicker what issues need to be looked into as you're in the sandbox. And it also fosters collaboration. So this whole conference is talking about how we want to collaborate with different players. So use of this sandbox would be able to also allow us to collaborate within this safe environment of the sandbox. So all in all, it seems like a very good initiative. We'll see here at the bottom on the map, there's a lot of different financial sectors around the world that have introduced sandboxes and have had success in them. On the map there, we've just got South Africa, but I do know that in Kenya, Nigeria, I think Sierra Leone as well, Ghana more recently, they've also introduced this and are trying to just test different innovations within the space. And I'm glad to say that also in Zambia, our regulator did announce last year that there will be introduction of a sandbox here in Zambia. So hopefully, as insurance companies will also be able to take advantage of this new innovation, this new tool, to be able to test some of our innovations within this environment of the sandbox. Yeah, so basically this is what I had for you. I had a short period of time in which just to synthesize everything for the panel discussion. And I hope that what I've shared with you has been helpful. And I think I'll take questions now, if that's okay, and just say thank you very much for your attention. Okay, so I understand we're using Slido. I'm not sure on the technical team if there have been any questions that have been posted yet. I'm just checking on my phone as well. No, I don't see anything. Are there any questions? No, I think we're comfortable and ready for the panel discussion. Thank you very much.
Thank you very much, Maiwase. Looks like your presentation was perfectly clear. So we have a token. May I invite the board chair to please come forward and make the first presentation of the day to the first keynote speaker of the day. Thank you very much, Maiwase. So that was the first keynote address entitled Regulation at the Center of Balancing Innovation and Stability from Maiwase Chilongo, Risk and Business Management Expert. So we're getting ready now for the first panel discussion, which is entitled Regulatory Framework and Policy Synergies. But just a few more housekeeping announcements. Obviously, we're in a different location today from where we were yesterday. And so just to let you know where the conveniences are that we'll be using, there's that curtain partitioning at the end. So the conveniences are just behind that partitioning. So you don't have to go outside the tent, just through the openings that have been made in that curtain. And you'll find a number of mobile units. So there's some personnel there. Just ask them and they will show you which one is available to be used. So the conveniences are just behind the partitioning at the back. And so we're getting ready for the first panel discussion. Let me just repeat a few of the announcements I made earlier. The excursions tomorrow, Chaminuka, departure from here, 8:30. Sunset Cruise in Kafue, departure from here, 12 hours. The National Park, again, we will tell you what time, the specific time for departure from here, but at least we have been advised that arrival at the National Park should be at 8. And then again, tonight's dinner, the final dinner of our conference, of our summit, and we would really like to see all of you in attendance tonight. So please plan. Whatever other plans you were making for tonight, cancel them. Cancel them so that we are together tonight in the last dinner. And sponsors as well, those that want to be sponsors for the next or the following summits, please see any of the Kenya Re officials, and we will make sure that that will be arranged for you. And so, we now have the first panel discussion of the day, and the moderator is a man that I am proud to call a friend. I am right by saying so, aren't I? Yes, indeed. Mr. Chavala Lumbwe is an insurance industry expert, having worked many, many years in many of the leading insurance companies here in Zambia, and is here today to moderate the first session of the day. Let's put our hands together to Mr. Chavala Lumbwe. Regulatory frameworks and policy synergies, and he will introduce and invite his panelists to join him on stage.
Good morning, and a warm welcome to all our guests to Zambia, and Lusaka in particular. I'm sure you are enjoying the weather and the hospitality. This morning, our first panel discussion will focus on regulatory frameworks and policy synergies, and obviously looking at what we've done or discussed in the last day or so. We have an exciting panel to assist us unpack some of what Maiwase has just presented. And also, the good thing is we also do not want our past to be our future. That is, I think, why we are here, so that we can keep up with the change that is taking place, and we embrace it and run with it and become better people, better organizations to serve our customers. And in helping me to run through the panel this morning, may I invite Dr. Brian Manchishi, who's our Deputy Registrar for the Pensions and Insurance Authority. He's got 17 years industry experience, and now he's moved to the regulator. So Dr. Brian Manchishi, please join me up front. Also on our panel, the good thing with me is the people that form the panel are my colleagues and friends, so it makes it easy for me to run through. May I also take the opportunity of inviting Dr. Nkaka Mwashika, who's the Executive Director for the Insurers Association of Zambia. Again, an industry colleague with over 25 years of experience and has a lot of information and insights to share with us. Another exciting and good person, we've shared platforms together, is Kachiza Kwenda. Is the CEO at Prudential Life, also 19 years of experience in both financial services and insurance. Kachiza, please. Least but not least is, for me, I call him Volikando. We are a product of a common experience with Likando. We worked for Madison Insurance. We were in the team that started the company when we were all young. And Likando and I come a long way. Now he's moved on. He's now the data commissioner for the Republic of Zambia. Volikando, please join us. Obviously, we've got a number of themes that we'll try and address this morning. I know the time is a bit tight, but we'll try and see if we can do justice to some of these topics that we have. But I thought before I open my panel to address the various issues, I thought let me just sum up what my WASE has just presented so that my friends and colleagues here can now take the liberty of addressing some of these things in specific detail. One of the issues that we are faced with in terms of regulatory supervisory frameworks and signages is the issue of convergence of services. There's a bit of blurrity between industries and the complexity of trying to regulate those services. The other bit is the technological advancements. We've seen a rapid innovation, and are we keeping up from a regulatory side with those issues? We've also seen emerging risks. Cybersecurity has become a challenge, and we need to deal with that. And obviously, the other bit is data privacy and protection. And you see, data privacy and protection becomes a challenge because of cross-border transactions where there are different regulators involved in various transactions. Then we also have regulatory fragmentations. I think Maiwase mentioned that. We have various industries, various regulators. So how do we harmonize those issues? Yesterday we spoke about financial inclusion. It also presents a challenge to the for the insurers, banks, and also telecoms. Then one aspect we always grapple about is legacy systems. how do we integrate new technologies and our outdated infrastructure. I'm sure I'm speaking to this, and you all appreciate we are faced with challenges in our various organizations to strike a balance between new technologies and outdated infrastructure. Then also there's the issue of skills. We have expertise to also attend to the changing requirements. Then we also have cross-border operations, which make it very, very difficult if you're looking at regulation. So with that said, may I address Dr. Manchish with regard to issues of regulation? How do we harmonize the various regulations? And whilst we are harmonizing, what are we looking out for? What do we want to see at the end of the day? And whilst you are looking at that, do we have any existing laws that supports the harmonization issues?
Thank you very much. Thank you for that question. Okay, so while we are sitting here looking at how we are going to harmonize, the beauty is that the customers that we seek to save, both as insurers, as the banks, as well as the telecoms, the customers we seek to save have already evolved in the aspects of making business easier to do. So customers have already moved ahead, they've already evolved. So it's really the aspect of a catch-up game. To what extent are regulators going to catch up? So if you are going to bring it in the soccer scenario, so it means the customers we seek to save have already scored an early goal. So in them having scored an early goal, it's up to now the regulators to play a catch-up. So this catch-up, just like again in the soccer scenario, you don't just go trying to equalize. You have to stay calm. If your opponent has scored in the first 10 minutes, you have to get composed, because in Zambia we say ball in 90 minutes. You have to get composed and put your systems in place. So the customers that we seek to save have already digitized, they've already aligned. We see in banks already selling insurance. We are seeing already insurance companies as well as telecoms already dealing with the aspects of insurance, and obviously there's that cross-cutting. So the question now is, how is it that regulators are supposed to come on board? So this discussion is already ongoing. They are already at a global level. They are standard setters in terms of the banking sector as well as the insurance sector. We have the International Insurance for Supervisors. This is a body that sets guidelines on how insurance companies globally is supposed to conduct itself to be responsive to what is happening on the ground. So the global setters, the discussion is already happening, and the same is being reflected on the banking side. So the global setters are already talking at that level, and we see common themes already coming into play. We are seeing market conduct, we are seeing the aspect of policyholder protection, as well as financial stability. So there's already a talk at global level, but obviously global is just global. We bring it down to Africa. There has been this discussion around the African continent free trade area. So there's already a discussion which is happening back home in Africa, or now we're going to harmonize goods and services, the trade and selling of goods and services, including the financial aspects. So these discussions are already happening. The question is, how do we then localize? What is happening in the local space? What are we doing? Presenter Maiwase did bring out of my mouth what I wanted to speak to. In Zambia, we can talk about a lot of collaboration. While the picture that was presented was that of a messy situation in terms of the different regulations, what's supposed to happen at any given time. But in practice, there's already a certain level of harmonization. There's already a certain level of collaboration among the different sets of regulators. I can give an example of the harmonization which is happening between the bank and the insurance supervisors. It's the Bank of Zambia and the PIA. It's on record that there are currently 2 banks that are licensed to sell insurance as brokers. So if that is not harmonization, what else are we looking at? There are already insurtechs that are selling insurance, that have already made a platform in terms of payment of premiums as well as settlement of claims. There is already the aspect of some partnership that is taking place between insurance companies as well as banks in terms of the aspects of bank assurance. So there's already that aspect of harmonization that is happening. But then just to bring out that while this is happening from both the banks as well as insurance, we need to take it. What we see as a currency for us to deliver is technology. For a long time, we have been in this aspect of the long term dealing with pen and paper, mortar and brick. But having the customers that we seek to serve already evolved, already digitized. There's a centralization around digitization. So what we see from the banks as well as the insurance supervisor's point of view, technology then becomes the currency in which we're going to use to communicate. So while we have this level of harmonization between the Pensions and Insurance Authority as well as the Bank of Zambia, the currency which we are going to use to deliver, to communicate, to trade is technology. Talking of technology, and I'm happy that my master did talk about the sandbox. We realize that this is the only way we're going to bring all these 3 different, the trinity, technology, banking and insurance. If you speak spiritually, that is the trinity. How do we bring this into actualization? So we brought about the aspect of a sandbox. So what has happened is that at the beginning of the year, as PIA, we did convene a number of engagements, a number of stakeholder engagements and workshops, trying to say, let's not remain behind. We are granted that we might be innovators in our own way as insurance players, but truth be told, the technology aspect, in terms of innovation, they are moving faster than insurance companies. So the vehicle that can be used to bring together this is the sandbox. So from those engagements, we came up with this concept, and it was warmly received by everyone in the industry. So based on that warm reception, we retreated as the Pensions and Insurance Authority and started developing guidelines on how to do it. Yes, it's something that can be used to test and learn, but it has to be done in an environment that is guided. Because truth be told, this testing will not be happening on rats. This testing will not be happening on rabbits. It will be on human beings. They need protection. So guidelines needed to be developed. So the guidelines were developed, and at the point that guidelines were developed, again, as PIA, we came back to the industry to say, this is what we have developed. This is what we think is supposed to be guidelines. And again, a stakeholder engagement was held to make sure that it's a blueprint that everyone else is going to be happy to use. So with that, we see that come January, we're going to start making calls for people to apply. Who then qualifies in there is not only insurance companies. Yes, insurance companies do qualify, but to the extent that that product is not yet tested. That product will not undergo a lot of regulatory oversight. It's a test and learn environment. Insurtechs also don't necessarily have to be licensed. It's a test and learn environment. Everyone is coming on board. In terms of other aspects, there's this regulation, that aspect of interconnectivity between the Bank of Zambia, the Securities and Exchange Commission, where we have these tripartite engagements to make sure that the customers we serve, they are the same clients. There is no particular clients who are just for the Pensions and Insurance Authority or for the insurance sector, not even the Bank of Zambia. So the clients are shared clients. So we do have periodical engagements because these are shared clients. If we are to think then, what would it be if we do not move in tandem, if we do not harmonize? There is also be disastrous. Because what is happening, like I said earlier on, the people have already evolved, they are already digitized. There's a convergence in terms of digitization. So if we do not do this, it means that there will be regulatory arbitrage. the insurtechs or different players will still find a way of having to provide insurance in a way that is not regulated. So we have no choice but to harmonize. We have no choice but to catch up. But this catch up, let it be in a guided way, in a test and learn environment, so that whatever lessons that are learned are then going to be replicated and then be used in a way that the data is protected for the clients that we serve, so that everything else is protected and no one is left unguided, knowing that the test and learn is happening on human beings. The test and learning might be happening on any one of us present here. So we need your information to be protected. You need to be guarded as a consumer. I thank you.
Thank you, Dr. Manchish. You've touched on a lot of things, and I am sure the insurers will be able to address that as the executive director for the association tries to address the issue of emerging risks that we are faced with, the issue of collaboration with the banks and insurers, and what are they doing. You talked about technology as well. I'm sure Dr. Nkaka will briefly attend to those issues. Dr. Nkaka.
Good morning, everybody. Thank you very much. I think I'll deal with the issue of how the collaborative oversight between the three wings in this space, which is the insurance, banking, and telecoms sectors, in terms of how they have successfully worked together to mitigate the cross-sector financial crimes, and then also deal with the specific practices or indeed technologies that have enabled this effort. So on the how part aspect, this has been achieved through coordinated frameworks, which have leveraged on shared intelligence amongst the three, as well as the ability to conduct joint analytics, and indeed the relying on the real-time communication technologies which is now available. And in our case, moderator, I would like to bring the practical experiences that we have on how it is working. I would cite I think a few products where we have seen this working. For example, our short-term insurance companies who are on the weather index program with government, which is intended to cover the small-scale farmers against adverse weather effects. Previously, it was not easy to go in this space because it was difficult to verify when there's a claim as to which is genuine and which is not. But with this collaboration now, it is easy to undertake a QIC. And in our case, we are able to now handle huge volumes of data for claims from government as to the bona fide claimants. And these claims are easily verified with the help of the mobile network operators. And we're able to now pay bona fide claimants. And the public have seen that this particular collaboration, of course, sometimes it does bring in about a delay in settlement of claims, but it's because we try to pay genuine claims and thereby avoiding and minimizing or reducing a fraud to a very insignificant levels. The other benefits or beneficiaries of this collaboration are also the life companies. When we are onboarding clients, we heavily rely on the verification of those details or information from the mobile service operators by using of identity numbers, mobile numbers, and national registration card numbers, including payments of pension claims as well as funeral payments. So we've benefited from there, from this collaboration from the telecom sectors. Then I also now deal with the practices, the key practices that have driven this this aspect. This has been also achieved through the consortium level data and messaging services, which enable responsible information to be shared amongst the stakeholders. And we have also seen that this has been also been supported by regulatory frameworks that have already been talked about, which have resulted in the industry becoming much more compliant legally in the areas of privacy, in terms of data privacy. And also we have seen that we do share threat intelligence, where if, for example, somebody has been fraudulent in the insurance sector or in the banking sector, this information is shared across the three sectors, and that way it's not easy for fraudsters or indeed criminals to be moving from one sector to another without being noticed. This has also, in a way, curtailed the ID thieves, the identity thieves, which are very rife, especially in the insurance sector, because the mobile network operators, through them, were able to identify those kind of criminals who try to steal IDs to make claims. Then I'll move on to some of the specific enablers that have facilitated this sort of scenario to benefit the three industries. We've also seen that we are also engaged amongst ourselves in the areas of data analytics using synchronized and aggregated data. We also perform secure encrypted platform for real-time and auditable data sharing. I've already talked about the KYCs have been enabled to be easily be undertaken. It's because of the presence of the MNOs. This is the mobile network operators. We also do undertake what we might call artificial intelligence-driven document verification tools, which help us detect individuals with very unusual behavior in terms of when it comes to registration of information across the three sectors. We also benefit from the real-time alerts which we receive amongst ourselves. I mean, we have seen alerts through SMSs that are going through, like reminding ourselves when it comes to things like renewals claims pending and all that. So all those have been made easy because of the collaborative oversight between the three sectors. We have also seen that there is a collaborative approach in support of legal provisions that have already been spoken about. These combine the complementary capability of these sectors, which have resulted in a creation of more agile, unified defense against financial crimes, which easily enable detection of and prevention of customer protection across the entire financial ecosystem. I think for now, Chair, I would stop here and maybe allow for any other questions that would follow. Thank you.
Thanks. Kachiza, we want to build resilience. And you can quickly run us through issues of scenario testing, scenario planning, yeah, which will assist us to get where we want to be.
All right, thank you. That's a good question. And I think it's a good question because every time I have my final results at the office, my actuaries come and then suddenly they start shocking my assets, they start increasing my liabilities, and to be honest, my usual first instinct is, why are you trying to disturb a really good result? We've got something that we can take to the shareholders and they'll be happy with us. And so when you look at stress testing and its origins, it actually comes from the mid-20th century, mostly done in the medical field, where I think that was when the onset of heart problems started to come through and people wondering, well, this guy was fine yesterday, how did he collapse, in the evening? And so then you would have your heart, vital organs, but usually the heart, tested under your normal sort of range. And then if any of you have had this before, you get on a treadmill or a bicycle, and as you get into these different zones, they start to check your different parameters. And that's when it actually shows where the dangers are with your health, more than when you're in your normal state. And I think bringing it into business, essentially your regular balance sheet may not show the full picture of what could happen in the not so distant future. And so then you need to stress your business and see where your vulnerabilities are. Now, like I said, sometimes, especially for people running the business, people with commercial sort of hats on, that's not the most interesting side of things, but it's important. And the results in and of themselves are not what you're looking for. You're looking for the actionable insights that you can get out of this from different areas. So you can either do it through, like I said, through the stress testing, but you can also have scenarios built in. I think we've had conversations here around alternative products, alternative suppliers. And if you hold on to the world as you knew it before, you may not be fit for the future. And the future now is advancing very quickly. I think we live in a world that's called VUCA. So it's volatile, it's uncertain, it's complex, and above all, it's a very ambiguous world. And if you largely rely on historical data and use it only at its baseline as your reason for going forward, then you are likely to land yourself in a lot of problems. And so in our environment, especially in Africa and Zambia, but across Africa, there are certain things which are obviously the shocks that would come for us, your interest rates, your forex, and it's important that you know. And don't limit your shocks to areas that still give you a good result. So you say it's never gone, 5% below, so let's not stress it to 6, 7, 8, right? Let's test our boundaries. Let's have multiple scenarios that come through. And I think then you'll be sort of set for a more robust business. The only thing I'll say is two things. In the world of scenario planning and stress testing, you need to limit it within a range that is acceptable. So you don't necessarily need to go sort of 20, 30 years forward. Do something that's more pragmatic. Typically, they advise about 2 years, and obviously that becomes a rolling number that you run with. But also work with the world of plausible things. Not possible or impossible, but plausible. So stretch possibilities, but don't end up in a fantasy world where now you start to think the sky is falling. but also don't be detached from possible realities. I'll probably stop there, but if there'll be any follow-up questions, happy to pick up.
Thanks, Kachis. I'll turn to the data commissioner, and the reason why he is probably on the last of the list because of the issue of data privacy. How does this affect issues of compliance, design, and how do we use it to roll out new products? And also there's an aspect of where the business is complaining about compliance cost and operational challenges that go with the data protection laws. Nikanda.
Thank you, moderator. I think I'll take you back to 20 years ago, 15 years ago, where risk was predominantly known in the construction sector. We never really talked about risk so much in the technological world. Today, the operating environment that you're operating in has brought in several risks that you as insurers or the financial gurus need to look at and be wary of. 20 years ago, you're not worried about can somebody steal your data who's 6,000 kilometers away from you. Today, those things are possible. We're not worried about we have this quantum of data. Is it all stayed in one environment? It wasn't the case. If you talk about medical data, it will predominantly be in at the various medical centers. All those things are no longer what is happening today. Today you have an environment where this data is seated almost in one environment. For instance, the insurtechs. We're talking about the fintechs. Given a fintech within 5-10 years, you literally have 80% of the insurance data with him. Now, these are some of the things that now have necessitated some new laws to come into place, because now the risk that evolves around data has grown. You can imagine that in 5-10 years' time, you have one entity that literally has almost all the insurance data in their database. How do you regulate them? You need to regulate them. What do they do with that data? How do they share it? And this is what has brought about laws such as the Data Protection Act. And if you talk about the Data Protection Act, it's not an act that is a creation, for instance, of Zambia. It's something that we've adopted at continental level because it's a global requirement, because it is really there to also save you as players in the ecosystem, because of the new risks that have emerged, which can only be addressed mainly also by using regulation. So, on one end, whilst it has technology has brought in a lot of advantages, of course, the issue of risk we can't run away from it. Now, one thing that that players should realize is that this regulation is not there to punish or make your lives difficult. No, it has to evolve. It has to work in this environment where we need innovation. We need the fintechs, because it's partially there to improve the operating environment. So I think from the insurance point of view, look at it that it's a law that is there also to safeguard you. Remember that 20 years ago, 15 years ago, these insurers, they never had rights. If, for instance, if you talk about the individual, today they have rights on how you utilize their data. They can take you to court. And we also saw on one end the laws that have come into place. They're also trying to safeguard you. When we talk about is it really there will it increase your costs? Not really. Some of the costs that you may not see that may arise out of you being sued because you've not handled people's data properly, they are quite huge. Some of the costs that may arise because your data now has become at a bigger risk than it was many years ago. Those are things that today this law is there to help mitigate. if we talk about cross-border transfers, yes, the law itself gives some rules on how data should be shared. Imagine a fintech who's got millions of records because he's been dealing with 20, 30 insurance companies. Would you want not to them to operate under certain rules because now they've got these thousands of data that they have. They need to be regulated. Now, that also brings aspect of us looking at what type of sector are we looking at. For the insurance sector, the nature of business is that if it's short-term or long-term, you do reinsurance. If it is life business, you end of year, you have to carry out actual evaluations. And that itself already tells us that the insurance sector is a sector that requires that their data be shared across borders. And on the basis of that, from the Commission's point of view, we will shortly be engaging PIA to give a blanket approval on data transfers in relation to insurance data. What we are trying to restrict is where you process that data from. We are asking ourselves, if the insureds, all of them are in Zambia, why should you process that data in a foreign country? Maybe that is where we may be a bit more strict because we haven't seen reasons as to why you need to do that. But the law, again, the beauty about it that it's open. If you can justify why you're operating in the Zambian market and the insureds are Zambians, but you need to process your data outside, the law, again, is flexible. It will allow that we can do that. But in terms of data transfers, because of the nature of the insurance business, we are automatically allowing that data will be transferred from Zambia to another country.
Thanks, Ricardo. I hope you've followed what the panelists have shared with you. And there's Slido. I don't know if you've got any questions at this point which you would want to us to address so that at least we can have an interaction. So I keep it open. I'll check my Slido. I don't know if anybody has posted any questions which you would want us to address at this juncture. Okay, Mr. Chipungu, I saw you raising your hand.
My question was just on the detection tools that were mentioned. Which tools are being used for this detection of the unusual behaviors?
I think Dr. Nkaka, that is addressed to you.
We are talking about. I think the question is about the tools that could be employed in detecting, or verification tools to detect tampering and unusual registration behavior. Yes. So these the tools can be generated or can be formulated using AI, and there are a wide variety of tools that can be using AI that can be example, in the registration of SIM cards, there are those that would want to have multiple registration of SIM cards. So it is easy, or it is possible to come up with an AI tool that would be deployed to detect such behavior. I hope that
Obviously, maybe Likando may want to chip in. Are we ready for blockchain in our jurisdiction or region? Because obviously, that is an asset that can help us detect fraud and have certainty to some of the contracts that we deal with.
The beauty about technology is that it's not restricted. Whatever is happening in the first world literally is usable even in our country as well. Therefore, most of these technologies that are out there, they are really also available for us to use. We talk about the blockchain, the AI, big data. These are things that we can deploy as insurers or as players in the ecosystem and benefit out of them. So restrictions really are not there. Maybe it's just a question of when are we ready to start deploying them, which I believe that as an industry, we are ready to deploy most of these tools and utilize them.
There are two questions I have on Slido. We'll deal with those and then we can wrap up. One is to the data commissioner. Some insurers use systems hosted outside of Zambia to process data. Are these considered cross-border transfers and are they prohibited?
There's a distinction between data transfer and data processing. Data transfer is where you are processing the data in the country, and at some stage you need to share that data with the other players, maybe your reinsurers, actuaries, and the like. That is data transfer. That is the one that we're saying that we will give a blanket approval to the insurance industry because their nature of business, there is reinsurance that takes place at any one time. They need to do actuarial evaluations at any one time. So that will give that blanket approval. In terms of data processing, we are saying that you've made a sale in Zambia, but it's first being keyed in on a system that is not located, that is not on a server in Zambia. That's the data processing we're talking about. And that is what we are restricting. However, despite the restrictions, the law is still open that you can come to us and justify why you feel that despite you operating in Cairo Road, you'd want your data to be processed outside Zambia.
Thanks. The last question we'll attend to, again, there's another one which has popped up. Again, it's about cross-border trade transfers. I think it's still with you, Commissioner. Do we get consent from third-party clients? And how do we require to share that data with reinsurers?
Consent is a very tricky environment to talk about, for instance. Yes, we need consent. Consent is one of the key elements that are within the Data Protection Act. In short, we are saying that for every data or every business that you are conducting, the insured should have given consent that you need to have their data. However, we're talking about you've already accumulated 15, 20 years of data. How do we manage consent? In this case, we are relying on the already existing records. At the time that you were engaging these clients for business, they signed some form of a document which allowed them for you to process. So there's an agreement. So in short, we are relying on that to manage the consent aspect. And based on that, going forward, there'll be what we are calling notices. These will be specifically for the insurance sector to be insurance notices. This is where you will detail what is it that you'll be doing with people's data. For instance, if you look at the banking sector, there are some documents which are given to you, which spell out some of the hidden words which you may not see in a contract. That's exactly what will be happening in relation to the insurance sector as well. You will need, for every new business, the client will need to sign off a document for them to understand what is it that you do with their data. And over and above that, it will also clarify that their data will be shared with reinsurers, to be shared with outsiders, to be shared with many other players to just aid the underwriting process. We are looking at it from the angle that a client should not be worried that they've approached Zambia State Insurance. Zambia State Insurance should now have that right to go and search around in relation to that client's background information, and that should not injure the client per se. So those are some of the things that will be very, very clear in the insurance notices.
Thanks, Likan. I've seen a lot of questions popping up on Slido. What we'll do is, because we've got a time constraint, the panelists will liaise with our host, Kinyari. Maybe they may want to address those questions, and they can post the answers on the forum. In order to wrap up, maybe just in a minute, Dr. Manchishi, in closing, a minute each.
Thank you very much. Like I said, the interconnection is already there. Insurance is based on utmost good faith and trust. But either fortunately or unfortunately, the shared clients don't trust insurers, they would rather go to banks. But the premiums still find itself in banks as investments. And the platform they are using is technology. So there's already that interconnectivity. It just calls for, as regulators, to be agile and try to play a catch-up game. Thank you.
Dr. Nkaka.
Thank you. Yeah, I think for me, I would say that in summary, put everything in context, it's quite clear that the cross-sector collaboration, which is driven by shared analytics, real-time intelligence sharing, as well as harmonized identity verification, including customer education jointly. We've seen that without doubt, it's proven very effective in mitigating financial crimes that span across insurance, banking, and telecom industries. Yeah, and for this to work, of course, it has to rely on innovation in terms of technologies. Of course, with the backing of a strong regulatory framework from the regulators, that is both PIA and Bank of Zambia, including SEC, for them to serve us effectively.
Kachiza.
Thank you very much. I would just say that stress testing, scenario planning are not there to expose you as you run your businesses, but they're actually there for you to use as a tool to build resilience, but also to find a competitive edge that you can run with. And so let us embrace this part of the business as we move into, I'll say it again, the volatile, uncertain, complex, and also ambiguous world of business. Thank you.
Thanks. Bolix.
The Data Protection Act and the Commission, they are really there to save you as the players in the industry. So in terms of cost, please, we are very, very mindful about that, and we ensure that this act does not increase your cost of doing business, but if anything, that it will help you mitigate your risks. It will ensure that your data is more secure. It will ensure that your data is more accurate.
I want to thank the panelists and yourselves for indulging us and for your attention. I hope we've been able to excite your thoughts, and as we disembark from here, we can have further interactions and we can pick it up in our individual organizations and do something that will change the way we look at things. Thank you very much.
A big thank you to our panelists. And now we'll just ask that they pause a little as we share some tokens of appreciation with them. Group Managing Director, please come and make the presentations to our panelists. Mr. Lumbwe, the moderator. In this one, there's no ladies first, so. Thank you. Thank you to our first panel of the day. All right, let's give them another round of applause, shall we? So that was the first panel of the day, which was entitled Regulatory Frameworks and Policy Synergies. And so we're going to go for a coffee break, and I think today we will achieve what we didn't manage to yesterday, and that is to have coffee and come back to your seats and have the coffee from your seats so that you can proceed with the program, because there's no hall for us to stay in and chat outside of the main auditorium. So coffee has been set up at the back. I'm sure you can all see where it is. So please get your coffee and let's return to our seats for the next part of the program. Please remember the conveniences are just behind the curtains at the back. And yeah, we'll have some more announcements a little later. But for now, let's proceed for coffee. And then once it's time for us to proceed with the other part of the program, I will come back and ask for your attention. Thank you.
You know your business better than anyone, right? So why not build an app to run it with Base44? This finance app solves your business headaches, tracking invoices, managing clients, keeping payments in check, all in one place. Go to Base44 and write your prompt, what your app should do, how it should look, and the problems it should solve. Base starts generating your app right in front of you. Invoice list, client profiles, payment tracking. It's like watching a team of developers, designers, and a business coach bring your idea to life. Now let's make it even better by adding features that fit exactly how you work. I'll add scan receipts, digitize them, and add to expenses. Now I can snap a photo and it's logged instantly. No more manual expense entry.
You're such a rush, my baby, slow down, come find your love. I'm hoping you see me, come serve it up. Loving when you stir it up, that body belong on TV. Oh, this feeling I can't hide. You're feeling up my mind, and I just don't know why. I just don't know why.
Why can't I make any changes without an admin approval? Huh?
You should try Monday.com.
I'm swearing off work platforms.
I know you've been hurt before, but Monday.com is different.
All work management platforms are the same.
Monday.com is the one you'll actually love to use. It lets you set up your workflows yourself. No admin, no long approval process. You're in charge.
I don't have time to learn a new platform.
That's fine. Monday also has a ton of templates you can choose from, so you can be up and running in no time.
Oh, that sounds nice.
Did you see the dashboards? They update in real time from your team's day to day, so you're always in control.
No freaking way. I don't have to put the data in myself?
Are you for real? Monday.com handles all the boring stuff, so you can focus on what really matters.
But what if we're not compatible?
If it's any type of work, marketing, sales, HR, llamas, and there's a free trial, so what's the harm?
You know what? I'm ready to fall in love again. Thanks, Talking Llama.
You don't remember my name, do you?
Of course I do.
Monday.com, the first work platform you'll love to use.
Can you guys see her? Can anyone see Elsie?
Battleship sunk. Enemy battleship detected. Enemy submarine spotted. Attention, reporting the target position.
Five lives. I'm a
What if you can create your own website by saying, this is what I want? With Wix, you can. First up, let's talk about AI color themes. You can get any combos you want, bold and bright, minimalist and sleek,